Taking a step back to the macro, while the long talked about recession has yet to hit in the U.S., investors are still facing conflicting trends. So let's talk about some defensive plays, perhaps. Back with us, Jim Tierney, AllianceBernstein Concentrated U.S. Growth CIO. Jim, you sort of mentioned this before, right? That in this environment, you want to find places that are going to be sort of more reliable, if you will. So where are some of those areas?
I love healthcare right now. If you look at hospital admission trends a couple years ago, people were afraid. They were pushing off elective surgeries. We were seeing trends down 3 to 5%. Last year, they were flat. This year, based off of first quarter numbers, they're up 3 to 5%. So a company like an Abbott, as an example, which is providing a number of products on the elective side and some non-elective, that's an interesting opportunity, one that I own, one that my clients own. Anything volumetrically related, I think, is going to do pretty well here.
I mean, Abbott's had some challenges, though, right? Related to formula, related to some. So does that mean that it's attractive from a valuation perspective as well because of some of those struggles?
I think it's very attractive. First of all, they have more than $10 billion of cash that they're going to be able to use at some point, whether that's share repurchase or doing accretive M&A. Secondly, when you look at the formula market, there are long-term contracts. And I know the government's looking into that, but there's real stability there. So I think that this is a much more stable, growthier kind of healthcare name that's pretty darn attractive right here.
There's been a ton of focus around financials this year, and for perhaps the wrong reasons because of the banking turmoil that ensued mid-March. You think about any type of rebound play that could be in sight for financials. Is that clear on the horizon, or is there still more to be concerned about within that sector specifically as we're looking across the landscape here?
Sure. We own Schwab, and I own it as well. I think that's a real opportunity. You have the TD Ameritrade cost cuts. They did another wave of client cutovers this past weekend. Or Memorial Day weekend, you're going to be able to pull out a lot of cost out of that model in 2024. They are the low-cost provider. They're seeing assets come in the door day after day after day. Now, I understand people are worried about cash sorting, but what we're seeing is sorting behavior is really starting to tail off. If the Fed's on pause, or if we even get a rate cut late in the year, that kind of is the final nail in the sorting coffin, and I think that would be very well received within financial investors and those stocks.
I'm really sensing a theme here, at least in these two examples, right, between Abbott and Schwab, because there's definitely been headline risk with these two stocks. But you're jumping in. Are there any other examples of companies like that you're looking at?
Oh, I love names that have no controversy, and certainly Microsoft falls into that category, right. and a nice AI play as well as the cloud business sort of bottoming here, and that's wonderful. So I'm not looking for controversy.
It was just coincidence, those two that we talked
exactly.
about. Jim, thanks so much for coming in today. It was good to spend some time with you. Appreciate it.
Thank you.
Jim Tierney is AllianceBernstein Concentrated U.S. Growth CIO.